guys. My name's Mark. I work for an organization called Credit Counseling Society. I'm a financial educator. And what that means is I basically go around and talk to people all day, do these presentations, or just let people know that we're around there. The reason they let me do this job is because I used to be a big banker. I had $10 million discretion at the swing of a pen, never really knew how to use it. Banking wasn't my thing because I'm not a big borrower of money. I don't believe it's good for all sorts of evils in life. I think it's got its place and people should try and steer clear of it as best they can for the most part. Before this, I was actually a credit counselor for 5 years, and I sit with couples or individuals and talk to them about what's going on in their life that's not really working in terms of money. And it was strange because I didn't realize that you get these great big men, like hands like boat oars, who'd come in and shake your hand and you'd say, "How you doing?" "I'm doing great." And then they'd start to cry because no one talks about money and it's super, super stressful. So I like what I do now. I've been a banker and a salesman. I've done a whole bunch of really neat jobs and made some money along the way. But this is fulfilling. And Credit Counseling Society is a charity. And what we do is we reach out to Canadians from Ontario out to the West Coast, and we've helped almost 500,000 of them learn to deal with their money better. And we do this by providing that free and confidential budgeting sessions. I'm the financial educator. I go and do courses like this at universities, schools, libraries, public businesses, and we'll help people find the right way to deal with their debt, whether through it's a repayment program or bankruptcy or selling an asset. We give referrals out to all sorts of different agencies that are reputable. So if you come in and see us and you need the food bank, well, we'll send you to the food bank. If you come in and see us and you need a bankruptcy trustee, we'll tell you the good and the bad and we'll send you there, but we don't take kickbacks or there's no commissions for anyone. We just try and help people find solutions. So today we're going to talk about irregular income. And the reason why people struggle is broad. The truth is we see people for all sorts of reasons, but generally life has gone on pretty well and then something major breaks. And in terms of people who are sort of getting a less than steady paycheck, it can break that much more easily. I mean, people, when they lose a job, they run out of income. But the first people who called us when the oil economy sort of bust were the contractors. It was like one day in January, they all lost their jobs and they called us and said, "Hey, I don't get EI, I have no safety net, and I have a truck that I have to pay for because I used it for work." And it was real hardship for them. So the people we see are usually people where life has gone on well, and then, someone gets hurt, someone loses a job, or they get divorced. So what we're going to talk about today are what are the challenges around having a regular income? Because it's not a straightforward life like getting a 9-to-5 paycheck that people sort of anticipate life to be like. We're going to talk about the solutions that people can deal with when they have this strange flow of money so that they can better set themselves up and not find periods of hardship. And we're going to talk about budgeting and expense tracking. And by the end, I want you to say, look, I don't have regular income, but this is how I'm going to manage it so that I don't feel stressed out. I'm going to budget appropriately and really understand where my money has to go on a regular basis so that I can save when I have money to offset the times when I don't. And we're going to have you set up an appropriate budget for your situation. So the question is, what do you want to get out of being better with money? But the better question really is, how do you feel when you don't have enough money? Is it a good feeling? I'll tell you, I've been in a position where I've not had enough money, where a big night out for us was actually sitting in the house watching Seinfeld on our 13-inch TV eating egg salad sandwiches. Because that's all the cash we had, that's all we could afford to do. It was a terrible feeling and it was very stressful. And money stress is a stress that people don't really want to deal with. It's just something additional into everything else you have to deal with. Think about it, you got kids, you got work, you got a car, you got a spouse, all this is stressful. And then you have money on top of it, and people with money stress, they're 30% more likely to suffer from severe depression, 25% more likely to suffer from some sort of anxiety. Their heads hurt, they have migraines, their backs hurt because they're all stressed out and tense, their stomachs hurt. These aren't well people, they have a hard time moving forward in a positive way. So by understanding our money, we can be in a better position to take control. And when we take control, we feel better, we sleep better, we work better, we make more money, and then we have hope to have a better day tomorrow by saving for the things we ultimately want. So there are a lot of challenges around having regular income. Mostly it's about predicting when that income's coming in and when it's got to go out. When it's going to be big and when it's going to be small. And people find that when the income's small, it's easy to rely on credit as a backup. And the problem with relying on credit as a backup is that it's a negative cycle. Now when the income gets big again, we have to pay off debt instead of saving for when the income will get small. A lot of people tell us when things are good, they live big. And I've had a landscaper come in and he goes, wow, I started landscaping in May one year and I was making like 15 grand a month. I went in and bought a $100,000 truck. I didn't know October was coming and there wouldn't be any money. When our income isn't going to be predictable, we need to sort of maintain a common lifestyle. Something that we can keep going, whether life is big or small. And a lot of people feel stressed because their income's disorganized and they feel like they're doing something wrong. And I think people have to move beyond that and just recognize that they're not doing something wrong. It's just the nature of their pay pattern. And if they can accommodate that, that stress will go away. So we need to start someplace. What we should do is figure out what do we actually have to spend our money on. And then we need to know exactly what that money has to be. How much do we have to spend on those items? Because that's what's going to provide us security. And once we know those things, let's identify our situation and come up with a plan so we can budget accordingly and get rid of that stress. So we'll start. We need to figure out what we really need to have. These are the essential items. We need to figure out what our priorities are, what else we should be putting money towards on a regular basis, figure out what we can do without for the short term or maybe the long term altogether. And lastly, we need to prepare for the unknown. Because there's always something out there waiting to take our money when we don't want it to. So this is a neat little Venn diagram, Venn's diagram. And Sarah Lazarovic, she used to spend a lot of money, and she had to take control because she ran out of money. And she was a big impulse spender. So she did this diagram. She made a list of all the things she needed. And that's the big yellow spot. And she was buying all those things. And she made a list of all the things she wanted. And she was buying all those things, and that's the green spot. And then she made a list of all the things she was buying, and that's the pink spot. If you look right in the middle, when she really discovered, after studying her life, what she was using a sliver. The truth is, the things she thought she needed, she didn't use. And the things she wanted, well, we all want things for given reasons, but those weren't things she was using either. And then we all sort of have a problem with just buying stuff. It fills our time, I guess. The reason I show this diagram is because we need to get a real good handle on what we actually need. So I'll ask the group here in Strathmore, what are the things you actually have to make life go? Transportation is good. Anything else?
Food.
It's nice to eat once in a while. I do a fair bit of it myself.
Shelter.
It's good to stay warm. It's not like it was a hard winter this year. Hardly any snow at all. Anything else? If you're a small business person, you probably also need a cell phone or Wi-Fi or something so you can talk to your clients. These are kind of the essential things. Without these things, we can't make money tomorrow. And we tell people, they'll come in and they'll want to pay back their debt, and we'll say, whoa, whoa, whoa. You can't even cover your shelter, your food, and your transportation. You can't pay your debt right now. Worry about that later. Without these things, there's no good tomorrow. All good things will grow off this. So let's understand that when we go and we look at what we have to cover, these are the needs. The next question is, what are the priorities? And this can be a little confusing for people because we often confuse our priorities with what we want. And when our income's irregular, we consider debt payments to be something of a priority. And the reason we consider this is because for many people, your credit cards are your backup if you run out of money. And if you're not up to date with your credit cards, they take them away. I know, I was a banker. I used to take away people's credit. It is actually the part I best liked about that job. The other thing we need to do is we need to prioritize our savings. Because ideally, we won't use the credit because we will have saved for times when our income is down. And beyond that, we'll also save for our taxes, which are pretty important if we're self-employed or if we're a contractor. And we're also going to save for those irregular and emergency expenses. The flexible is everything else. The truth is we can go out with a lot of things for a very long time. I can wear the same pair of shoes with a hole in them until I just finally get myself to a mall to buy new shoes. The kids can maybe make things do a little bit longer. Their jeans become cut-off shorts. It seems small, But when things are really tight, we want to always make sure we're in a position to have the essentials. Now, that's not to say you can't have things you want. And I think it's important we all have some things we want. But let's recognize what they are, so when things do get a little bit tighter, we know where we can cut off our spending. Once we recognize what we have to have and what we'd like to have, we should really track to see what we spend on these items. If I ask you, what do you spend on groceries? Someone throw out a number. How much do you spend on groceries for yourself every month? $1,000. How come not $1,022?
Because you said throw a number.
That's all right. But if you know the exact number, that's when you can really take control. When we track where our money has to go to the nearest dollar, we see our habits very clearly, and this is what empowers us to make change. And the truth is, it's really hard to change a mortgage payment because the bank doesn't like you to pay less. But it's really easy to change how much coffee we drink in a given day. I could drink 7 cups instead of 8. Easy. And this is how hyper I am on 8. So how do we track? Well, there's lots of different ways to track. You can use a pen and a piece of paper. And David Chilton, who's the wealthy barber, he wrote the book, The Wealthy Barber, he says people who track on a piece of paper and a pencil are less likely to spend money because they don't like tracking. So consider that motivation as well. And it's really good if you're living on a cash budget because you see where all your money goes. But when we do it, it's not about going into the Tim Hortons, getting our coffee, getting our donut, getting our free paper, and sitting down and then thinking we're going to track it. It's about ordering, writing down the expense, and then going and sitting down and eating our donut. We have to be right on top, be accurate. A lot of people will use a spreadsheet, and they'll keep their envelopes and just tally it up at the end of the week. Good way to go. You can use your bank software. Bank of Montreal, where I bank, has Money Logics. It will show me what I spend on my credit card and debit card on a pie chart. So much at a convenience store, so much at a gas station, so much at a grocery store. You can also use an app like Mint, which is a tracking app you can get at the Play Store or the iTunes Store, and it will do the same thing. Be careful when you use a tracking app, though. If it reads into your bank accounts, the banks will no longer indemnify you against loss if someone breaks in. Whatever way you want to do it, I'm going to suggest you track the key parts of your life. And you don't need to track your rent. You know what your rent is. It changes once a year. Update it once a year. But maybe you track your groceries because that's a big personal expense that you have direct control over. And it's where you can make some changes to better influence your future through savings. With some people, maybe it's tracking how much you smoke. I had a gentleman. We're doing his budget, and no one ever brings me in the budget when we're sitting down for credit counseling. We do it together. I don't know why that is. And I said, well, what do you spend on groceries? $250. What do you spend on beer? $50. How much do you spend on cigarettes? 3 packs a day. Well, why would he tell me all of a sudden 3 packs a day instead of the dollar amount? He didn't want to know what he was spending. Anyone know what 3 packs a day costs over the course of a month? $1,400 in cigarettes.
That's crazy.
He had to track it to figure out what he was actually spending because he didn't want to know. And strangely enough, when he came back to me, he said, you know, I smoke a lot, Mark. I should really change that. Yeah, I don't want to discourage your habit. You could get a gold medal in it, but it's okay to make those changes. So track 3 things for 2 weeks, make some changes, and find some money to save. And this is just an example of our credit counseling tracker. The whole idea is that we look at groceries in week 1. We spend $88 on the 6th, $14.10 on the 8th. We know we spent $102.81. We didn't spend $110. We didn't spend $95. We know exactly what we spent. So when we go back and put that in our budget, the number's hard. If we say we spent $110 when we spent $102, we've lost $8 because that money will disappear. Money always disappears if it's not assigned someplace. If we say we spent $95 when we spent $102, our budget's short. If we're really tight in our budget, we don't have enough money, we're going to not know this because we overspent on groceries compared to what we planned. So, once we track, depending on where you're at in your regular income, is this new to you? Maybe you just quit your job at the big oil company making 140 grand a year because you're going to go and do something different. So maybe it's new and this is something that you've not become very familiar with. It's not a bad idea to figure out how to build a budget. And there's 2 ways to do it to start with. The first way is to set an income target. And this is a good way to go if you're a person who's going to go out there and can make more money at will. Sounds funny, right? But if I'm an insurance salesman and I know for every 10 doors I knock on, I get one sale for $1,000, I might say, I'm going to knock on 50 doors this month and have $5,000. And that's where I would start my target at. I will have $5,000 to spend. This is the life I can fill in my budget. And it's going to include all the things I need, all the priorities, and all the things I want. If, on the other hand, you have less control, this is where you set a spending target. And the idea is, I'm only going to have this much for sure income. So I have to figure out how I'm going to make the things I need work. And should more income come in, I'm going to go spend it on my priorities and then the things I want. So you need to figure out a place to start so you can start a rough budget, always ensuring that you cover the things that are truly essential. If you've been doing this for a while, you might be able to identify how much you make on a regular basis. So you might ask, do I have 3 years worth of taxes where I can see my actual real income? Or have I been around long enough where I can see the swells in income and the dips in income over a course of a period of time? And if I've done this, do I think I can successfully manage the inflows and the outflows of cash by balancing out through savings and drawing a straight income from a bank account? And that's where we would use an average income budget option. The key principle is that you know how much comes in historically, so you can predict a level payout over a course of time. And most people will either pay themselves monthly or they will pay themselves bi-weekly, depending on how they've arranged mortgage payments, car payments, and things like that. But you do need to organize your banking, and you have to ensure that you keep your receipts separate for business and personal expenses. And I'll tell you, I've been a business banker and I've been a credit counselor, where people run into trouble is that they commingle all their finances, and then the tax man gets angry at them and wants a lot of money. So always keep your personal and your business expenses separate. If we put this into effect, what we're going to see is in 2014, we made $36,000. Pretty good. It was a better year in 2015. We made $45,000. And then in 2016, we made $40,000. It's a pretty steady pattern of income. And while we're all optimistic, we don't want to overestimate. So if we take an average of $40,333, we know that we should be able to pay ourselves a regular monthly income of about $3,300. Because the money comes in fairly regularly. We could also look at this monthly. And I had a friend who sold sneakers. And he said, Mark, September and October are great months. Everyone's buying them for Christmas on these sneakers I sell. But in November, I starve because everyone's bought up and they don't sell through until the end of December. So in this example, we could say 1 month we make $4,500, the next month we make $5,400, and then in March we only make $1,200. Well, if we take the average of 3, we should be able to pay ourselves $3,700 a month pretty regularly if the pattern repeats. So if we understand that our income ebbs and flows in a fairly set pattern, we should be able to organize our banking so we pay all the income into one holding account. And from that holding account, we're going to pay ourselves a set monthly salary based on the average income for the period. The idea is that if we have a surplus, it's going to tide us over in the months where we have a deficit. So to put it into action, our monthly withdrawal is $4,000. That's what it takes to make our budget work. And in January, we had a great month and made $8,000. So we're going to draw $4,000 into our spending and keep $4,000 in the holding account. So we've saved $4,000, which is a good thing because in February we have a terrible month and only drawn $2,000. But that's okay because we're still going to be able to draw $40,000 out to pay ourselves our monthly expenses, and we'll have $2,000 remaining in our holding account, which is good because, again, March doesn't give us that $4,000, but we have money in the holding account to offset the shortfall. So ideally, all the money will go into the holding account, and then every month or every 2 weeks, we're going to draw money out to cover our fixed expenses, our variable expenses, and our savings. Make sense so far? The other type of budget is a two-budget principle. The idea is that we have a predictable set of income. We know that maybe summer times we'll make lots of money, and winter times we might not make any money. Let's say you're landscaping, for example. The idea is we're going to adjust our spending and savings so that we spend and save more when times are robust, and we tone it down when times aren't as robust. This first diagram in blue shows us our fixed expenses. And you'll note the orange diagram, those don't change. These things are always the same. Our mortgage payment doesn't change just because we don't have as much money. But our variable expenses are more robust because we have more money. And this is a time where if we need new glasses, it's a good time to buy new glasses. But we're also saving a lot of money because we know in the off season, we are going to need our savings to make ends meet. The orange diagram shows us the slow time. We'll see that our fixed expenses remain the same, but our variable expenses shrink. And that's important because when we have less money coming in, we want to have less money going out. So maybe we go to fewer movies. Maybe this isn't the time of year where we want to go and, rebuild the car engine. Maybe we should have done that when it was a little busier, or wait till we have a little bit more money coming in. We'll also say that our savings starts to fade because this is the time when we're going to draw from our savings. When things are slower though, before we go and attack our savings, let's try and pull back the rest of our lifestyle. When things are good, people live up to how much money they're bringing in. That's called lifestyle inflation. As the income goes down, let's bring our lifestyle down. In terms of food, can we buy groceries more often instead of going out to eat? Can we make coffee at home instead of going out and buying Starbucks at $3 a pop? You can make a big pot of coffee for like 25 cents. Just one of the things to consider. Can we do other things for entertainment? Maybe we went to a lot of movies when things were really good, and we come to the library and borrow movies for free instead. Just an example. We don't want to eliminate savings if we can prevent it, because savings are what save us. We might have to go and stop contributing to them, or even draw from them, but that's the last thing we want to do. Savings are super key, because they're going to help us offset those irregular expenses we have to endure. They're going to save up for emergencies, and they're going to pay our taxes. And often what we see is people will tap their tax account when things get slow and end up owing the government a lot of money at the end of the year. The other thing is by pulling down our lifestyle and using our savings, we're not using credit, which is a negative cycle. Because when we have to pay back our credit, we have to pay, for most of us, 20% interest back on the credit cards. So the three types of savings we're going to talk about quickly. Irregular expenses. Does anyone know what an irregular expense is?
Like if you need a car repair.
Car repair is a good one. Any others? Property taxes. Maybe you pay them once a year if you're not on the TIPS program or something similar. Prescription drugs, eyeglasses, new appliances. Christmas comes once a year, right? It's not a monthly expense. There's a whole bunch of them. And the whole thing is, all these things are things we all have to pay. But most of us are pretty bad about saving for them. And if we don't save to cover these things off, things that we know we have to pay, where do we find the money when the time comes? Credit cards or lines of credit is the general answer. So by planning just a little bit, we can offset the stress that will come with not having money for these when they come up. And the first thing we suggest to do is you open up a dedicated account for these irregular expenses. And it's going to be called the Irregular Expense account, so you know what it's for. It's not the comic book and new boot account. It's the Irregular Expense account. Then we need to figure out how much has to go into it. And we can either do this by going through our budget and seeing what we've allocated on a monthly basis for things like car repairs or Christmas presents or what have you. Or we can just forecast. I got new tires for the car, I got to go see a dentist, I got to pay for Christmas, it's going to cost me this much. Then it's just about setting money aside on a regular basis to fill the account. And we're going to want to try and fill it as best we can when things are robust. But when our income goes down, we may still have to contribute to it to know that we have these things covered. So the example we have here is, if our annual irregular expenses are $2,400, we need to put $200 a month away in order to ensure they're covered, which would be $93 on a bi-weekly paycheck. But if I only really make good money 6 months of the year, maybe I have to put $400 a month away in each of those 6 months to ensure I have enough. The other one that gets people are emergency expenses. Has anyone ever had an emergency? Has anyone not had an emergency? And this could be anything. It could be from blowing a tire in the car or from falling off a ladder and not being able to work for 6 months. The problem with emergencies is we never know how long they're going to last, how they're going to impact us, or what the overall effect's going to be. And we need to be prepared. Because the truth is, if we're prepared, an emergency becomes an inconvenience. And financial planners would suggest you have 3 to 6 months of your budgetary expenses put aside. And you look like a fairly wealthy group here. I'm going to assume that's thousands and thousands and thousands and tens of thousands of dollars. An average family who makes $5,000 a month probably spends $5,000 a month. That means $15,000 to $30,000 in a cash account. If you don't have the money, it's okay. But we want to start contributing to this because everyone runs into an emergency. And I had a gentleman I put on a program, and he never had any money. He couldn't go bankrupt, so we talked to the banks and we got him on a payment plan. And all his dollar bills in his wallet, because he lived on cash, went to the car and went to the house. All his loonies and toonies and quarters went to buy groceries and incidentals. He had no money to save. But what he did is at the end of every day, he would pull the dimes from his pocket and stick them in a 2-liter pop bottle. Now, first you drink the pop, then you rinse the bottle, cut a hole in it, and glue it on and start dropping the dimes in. Otherwise, you have a mess. But over the course of a year, he filled that bottle. Do you know what you get when you fill a 2-liter pop bottle filled with dimes? Anyone want to guess?
2,000.
No, too high. Anyone else?
700-800, somewhere in there.
Well, first you get a hernia when you pick it up. But the other thing you get is about $700 actually.
Nice.
And it sounds small, but this is a person who's never had any money. And he said, I asked him, are you going to roll that up and turn it into bills, paper money? And he said, no, because if I do that, I'll spend the money. But he liked the fact where if he got a cold, he can now for the first time, go out and buy chapstick on a whim to keep his lips moist. It was a big deal. So ideally, we want to build that up. And if you keep saving money, $700 a year, it will add up over time. But it's really a de-stressor when we know we have a cushion to lean on. The last thing we really need to save for are taxes. And no one likes taxes very much. And I explain to my children that taxes are a good thing. They build the roads and the libraries. They keep us safe, and we have courts and military and all sorts of great things as a result. But it doesn't seem very tangible when you actually have to pay them for some reason. But it's important we do, and that's because of all the creditors you have, the CRA can be the most difficult to deal with. They have the most power to make you unhappy. And your taxes will accrue interest. And they accrue high interest, about 1% for every month late you are in paying them. The CRA can randomly freeze your bank account. You haven't paid us in a while, you're not listening to us, you're not responding to our letters. You can't transact on your business or your personal accounts. So you can't buy groceries. And you'll go to your banker and say, hey, you froze my account. Government said we had to, nothing we can do. Call the government. They get your attention pretty quick. They can garnish your account if you're getting employment income. So maybe you're on contract. They can touch base with the employer and just take that money off the top. If you're self-employed and have income, they can garnish your receivables. So someone goes to pay you, they can take that money. You can't buy more product to sell. When banks know that you're in tax trouble, they don't like to give you credit, so they could cancel your credit cards, close your overdraft. And lastly, they can force sale of your personal and business items. And they do this not by taking you to court to sue you. What they do is they get an order through the Federal Court of Canada to register your debt, which is like being sued. They have the right to then act on your property and your income. And the worst part about this is that you don't even know it's happened until they come and do it, because you've not been notified in writing that anyone sued you. And the way you stop it is to either see a bankruptcy trustee or a tax lawyer to intervene on your behalf, both of which can be quite expensive. So it's really, really important we set money aside for taxes. So what do? We save for our taxes. It's the most important thing. How much is GST? 5%? Put that away. If you have to pay tax on your income, 30% is a good number to work with, just as a rough number. Let's make sure we're accruing money for these things. We need to keep all our business and personal documents separate. Because if not, they commingle, and the government doesn't want to split them apart for you. We need to keep all our financial papers for 6 to 7 years. But understand the government can request them from as long as 20 years ago. It's just a standard. It's often worth investing in a bookkeeper or an accountant to help you with this if you don't know what you're doing, because no one wants to tangle with the CRA. If they do call you and say, hey, you owe me money, be nice to them. My friend Ben worked as a collector for the tax department. He worked for us for a while. Actually did this job. And he said if you swore at him, he would hit the button and up he'd go to the next level of tax collector who was less pleasant than he was. They can make you miserable, so be nice to them so they don't. And don't be afraid to talk to them. That's the thing. They think you owe them money, you gotta go figure it out. If you don't know what to do though, ask someone. Go talk to your accountant. Come talk to a credit counselor. Someone will help you with the information. So we've talked about a lot of things here. We talked about setting up budgets, determining our needs versus our wants, saving up for all sorts of different things. One thing we have to do is keep our savings safe from us, because most of us are our own worst enemies. And especially if our income is irregular, we do still want to have things when our income is down, right? So one of the things we suggest is for all our savings accounts, we make them deposit only. We make it really hard to take money out of them. You might have to go into the branch to do it, or get someone to co-sign on the account with you to get that money out. That way you know you're not tempted to spend the money on something different. We're going to take our savings accounts off our debit cards. And in fact, maybe we'll keep our savings accounts at a different financial institution than where we keep our checking account, just to make it that much harder to transact on. You can't just easily email the money to yourself back and forth on your phone. If we have a problem spending cash, we're going to lower the limits on our bank cards. And I did this for my son recently. He recently had his bank card taken, and someone signed him up for online banking and transferred themselves through email transfer the daily maximum to their account. And I thought, well, $300 for a 12-year-old seems like a lot of money. There you go. Let's drop that to $50. And it's one of the ways we're going to keep his accounts safe. But in terms of adults, what we do is we will spend up to our limit sometimes. Usually the top end is $2,700 on a bank card. Do you need $2,700 access? If you do, and it's a one-off, you can call your bank and they'll change it for the day. Don't shop on your credit cards because interest will accrue. You won't want to pay them back when it comes time. There'll be something else asking for your money. Let's keep the credit cards in the freezer in the house, or let's just keep a small one of this for emergencies. And if you do want to, you can live on an allowance. My wife gives me an allowance every 2 weeks. It really does safeguard the accounts because I spend up to my limit and generally I don't go over. An allowance kind of sounds like you're allowed this. It's okay to put yourself on allowance for those incidentals, coffees, comic books, what have you. At the end of the day, it's hard. There's so much to know, so much to do. Be patient and be forgiving of yourself. Try tracking a few expenses, see if it works, see if you can make some changes. If it doesn't, try again. It's all right. We learn from our mistakes, right? Watch out for spending too much. It happens again and again with people whose income isn't flat. You really have to bring down your lifestyle and live within your budget, or else you'll overspend and go to credit. So we've talked about a lot of things. I hope you can manage your regular income a little bit better by setting a budget and understanding about balancing your wants and your needs. That you'll save for those emergency expenses and for those taxes, and that you can create the right budget based on your own situation. Use lots of accounts for savings. One account for each savings goal you have. Keeps it organized and you can track your progress. Let's not use our credit cards. If we can, and I know lots of people, and I was in Vegas recently, and lots of people work lots of jobs, but they all seem to have something extra to get them over the hump. I met a teacher, a guy who built military drones, and a scientist, all of whom drive Uber on the side, just so they can flatline their income. If you can find a way to create a nice base, steady income, life gets a lot easier. If you need more help, you can find us at nomooredebts.org or mymoneycoach.ca. You can follow us on Twitter, Facebook, and Instagram. We do a monthly newsletter. We've helped 500,000 Canadians organize their budgets, pay their debt back, save for their bigger financial goals. If you need help, the key is to ask. And don't wait too long. I find Canadians as a whole are very bad at asking for help. And the longer they wait to seek help, the fewer options they have to address whatever's going on. Often it's a quick fix at the start. But if you don't fix the shocks on the car, at some point the engine falls out too. So that's it, everyone. Thanks very much.